The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another beautiful day at the headquarters of Technical Trading and Investing. It is TFNN.com. And we've got a very interesting day out here with markets that are moving in my pretty much in my direction, at least the direction of my trades. And as each day, we like to kind of start off with news. History, let's put that. But before that, if the market's moving, we like to get in the S&P and see just what kind of movement we have and what kind of volume. Well, we are trading out here at 18.45. We've broken through the 1848 support level. Haven't done a lot since then. Probably more interesting is the volume. We've talked about just the days we had of 1.7, 1.8, 1.9 billion shares on the New York Consolidated Tape. And for the new listeners, that is the New York Stock Exchange and all ECNs plus the Amex and all ECNs that trade those stocks. We are about 2.22 billion shares as we start this day. That is at least some significant volume. Looks like we're going to probably print 3.6 to 3.7 billion shares at this rate. But when you're down on a day like this and you don't get a decent pop before the end of the day, not uncommon to see a lot of people throw their hands in at the end of the day and even get more volume. Anything probably about 3.8, 3.9 billion by the end of the day or more, I think is going to be a definitive signal, especially when we've only been able to get 2.8, 2.9 to the upside, trying to get through those highs in the 1880s, 1890s on the S&P cash. We're starting to see some stocks actually give some support levels. Probably when you look at a day like this and we see the biotech index, the IBB, only down 62 cents, gives you a good idea that a lot of these have already washed out. Not uncommon to see stocks like that, like Netflix off $2. Of course, they're already off $100. So the question is, are we in for a bounce? And the answer is probably not in the bigger markets. The big lie on CNBC, Bloomberg, and Fox Business News over the last few days has been mostly from these folks that want to sell into this move, which is you need to buy the bounce. You don't need to wait until you get a good sign. Just buy the bounce, buy the bounce, buy the bounce. It's worked forever, so buy the bounce. And what we have seen is pretty much what I described last week, a market that has truly moved, and over the last few weeks, we've seen these the smaller stocks get sold. Now we've seen the high flyers sold that basically had ridiculous valuations. We saw a lot of energy come out of the fastest movers in the biotech stocks. So those are going to bottom first. And next, we're going to start seeing, or last, we're going to start seeing the generals sold. General Electric, all the big high flyers in the S&P 500, and the Dow. I think we probably have a 90% chance of testing 16,000 fairly quickly before we get any bounce at all. But at least some of these, like the IBB, probably getting ready to start its B2C leg of an ABC or bigger ABC down, and I suspect we could see this sell-off continue well into May, June, and or July. So buckle your seatbelts and get ready for a big ride. As always, you can call me at 877-927-6648. You can email me at path@tfnn.com, and you can put a note in the den if you're in there, and let everybody know that you're still alive. I know I can hear you in that den. I can hear you breathing, as they used to say. So we will get an idea about that. No. Junk mail, junk mail, junk mail. Just wanted to see if anybody had sent me anything other than junk mail. Anyway, we'd like to start off the day as soon as possible with history, because if you don't know your history, you're bound to repeat it. We're talking about the biotechs. In 1979, venture capitalist Robert Swanson and biochemist Herbert Boyer found Genentech to develop new drugs by manipulating the molecular structure of DNA. They call their new firm a biotechnology company. And it's fairly recent out there. Probably more interesting to me is a kind of a thing that went and came and went. But if you were there trading it, much bigger deal. And we still have these from time to time. But the security at most of these news firms getting a lot better. Online traders spot a Bloomberg News Service page reporting the news that Paragon Technologies has agreed to be acquired by ECI Telecom at a rich premium over its current stock price. Paragon stock promptly soars 31%, then crashes as Paragon and Bloomberg announced that the news page is a fraudulent announcement cleverly designed to look like genuine Bloomberg news. So what do we know? This has happened several times. I'm pretty sure is it Elon? I think it was Elon, rather famous for another one of these phony stock news reports. But one thing to know is that the news is a double-edged sword, and occasionally these things come up. I probably may have traded several of these. But a lot of times you can tell from the news report. Again, much better security on these news reports, but they still happen from time to time. I think we've gotten two smaller ones in the last year that haven't risen to the level of this or Elon, or what is it, ECN? Yeah, I think it was Elon. But that one was a guy that worked in the back room of one of these news companies that actually sent a fax out that was phony. And I remember it went from $130 to $50 in a matter of an hour and a half. Normally, one of the things that will raise the cockles, I like that word, not used enough, cockles. Anyway, the cockles on the back of your neck, or is it the hair on the back of your neck and the cockles somewhere else? Probably why it's not used enough. People don't know where their cockles are. Anyway, I digress. Probably going to win another award this year for digressing on TFNN. Anyway, we've got normally these scams and news scams are when you see the companies in California, and most likely there isn't anybody to get up for a few hours and say, hey, what's wrong? Now CNBC, Bloomberg, Fox Business News all has the phone numbers and the ability to text the CEO when any of these things come out of the blue. And again, they've taken to going after companies in foreign lands now where these guys are 2, 3, 4 in the morning. And you might not even get them to answer the phone at that time. Occasionally, they still get these things to work. But just as a reminder, news that's too good to be true or bad sometimes is. Why they're showing film clips today of the UPS driver chasing his truck that he left in gear. I've noticed over the last week a very interesting phenomenon, that is the UPS is picking a fight with the unions right now. It would be different just to not try to turn the temperature up, but UPS actually getting in a brouhaha with its union in New York. Company dismissed 20 of their workers after their shifts last Monday, issued notices of termination to another 230, notifying them that they will be fired once the company has trained the replacement, U.S. spokesman told Business Insider. But it's all about trying to get a guy that is a union head out of UPS. unclear really what's going on, but normally most of these bigger and larger companies will look the other way. Apparently, either this guy is so bad or UPS is looking to break their union. But keep a close eye on this. This is very rare news to see somebody personally going after a individual in the union and more willing to fire everybody than not. I haven't heard anything more about this. Maybe the temperature's been turned down over the weekend, but still very interesting out here. And, of course, it is a mad market. And you can certainly give me a call at 877-927-6648. Certainly seeing a lot of stocks give meaningful movement. And what is Goldman Sachs? Yes. Looking at some of these stocks starting to break down. Wanted a little bit more volume, but even some of these stocks that are heavily pushed with their own trading floors unable to keep lows. We are seeing at least a lighter volume in some of these stocks. In Goldman Sachs, seeing, let's go ahead and do this here. In Goldman Sachs, seeing lighter volume so far. Probably going to come in lighter even at the end of the day. And these are the generals that are racing up the hill or down the hill, almost always behind the rest of the troops. What we see in this is the February 3rd low being challenged. That was 159.77 cents with 5.1 million shares, 2.8 million shares. We've gone below it. I suspect we're probably going to close below it, but some of these stocks are starting to already reach some support levels. So just keep an eye on those as you will. We've got lots of stocks to look at today, and I welcome your phone calls. Spent most of the morning waiting for the stock market to roll over. What do we get back up to? What, about a point and a half down on the S&P cash. So I knew that we were probably going to roll over as soon as the rubes came in and marched in and got their hats handed to them, so to speak. But in the meantime, we had a volatility trade in the newsletter. I did want to send out why and how I did that. So I kind of spent that together. So if you are a subscriber to the Path of Least Resistance, make sure and check your email. You'll see, well, at least a few things on that ongoing trade. Other things of interest out here, and, well, we're down to the last 50 seconds or so. I'll get back when we can. I'll get back into it when we come back. But the rise of fascism in Silicon Valley is starting to be problematic. And we're going to talk about a guy that was directly targeted because what? He dared to make money. He dared to invest in companies. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Checking my email real quick. Checking the den. We've got a bra. Ha 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 ha. I think everybody's probably in a little shock here that the market really did crack and didn't move anywhere close to where we were looking. But I will once again check our settings and see just how we had. Well, you know, we broke through the 1848 level on the S&P cash. I was suspecting that we might get a little bit of support, at least a daily support level in there, that we broke that probably pretty good indication that we are looking at 1827 at the next level of support. I think we're also probably going to see the generals in the Dow catch up fairly quickly and go for that 16,000 level on the S&P cash. And, of course, a lot of yelling, screaming, gnashing of teeth, wailing, dogs living with cats. We'll hear the whole end of the world if the Dow loses 16,000. We're 16,254. You probably never hear me talk much about the NASDAQ or the Dow. The NASDAQ is weighed far too heavily with a handful of stocks for me to bother with. The Dow Jones is worse. 96% of the stocks are institutionally owned of the shares. Very few people own shares of these big companies outright. Maybe it was 90%. I'm trying to remember the last article I saw on it. That means that not a lot of retail investors playing these Dow stocks. Almost all of them are owned. And when you get something that institutionally owned, fairly hard to move. Anyway, we were talking about the rise of fascism in Silicon Valley. We heard some things about Mozilla last week, and I could almost put that as a one-off. What we can't have now is several opportunities where they're willing to try to kill the goose that laid the golden egg in Silicon Valley. And the Appian Way out there is where all those guys tend to be. It's a road where most of the investment venture capitalists are. These guys have turned and put billions and billions of dollars into the tax structure of California. And they've been singled out. One such investor this weekend was picked out. And what did he do? Did he run over a small child, get drunk, and kill a van full of nuns? No. He made money and pays one of the highest taxes in the nation, and yet that is still not enough for fascists going after him, writing and spray painting his house, putting flyers everywhere, calling him scumbag. If I was probably somebody living in California, I might start thinking that they're treating me like the Jews in Nazi Germany. Did they really do anything wrong? Anything illegal? No. It is, I think, partly them being emboldened and the bully crowd. And we've talked about this many times before about how Orwell pretty much wrapped it up with his variety of books, 1984. But the one I probably liked the best out of all of them was Animal Farm. And if you just read the last page of our Animal Farm and know what it's about, basically the animals overthrow the owner of the farm. And at the very end of it, some of the animals start looking through the window, and they can't tell the difference between the animals that learn to start walking on 2 feet and the previous masters. They became what they despised at the beginning, and we are starting to see that nowhere stronger than in California right now. People are jumping on buses, throwing up on passengers because they don't like the fact that Google has its own bus fleet to bring its workers in and not tie up the highways with anything more than one bus. Anybody that has anything more than anybody else. But fascism is ugly no matter which side it's on. And punishing success, hiding from it, sometimes is the only way to avoid people like this. But I tell you what, if I didn't own a gun, I'd probably start buying one if I was in California. It may not be too far if you are successful that you have a bullseye put on your back. I think it's disgusting. And maybe those people in California are going to start waking up and wondering who actually pays the taxes in their state. Anyway, we will be back shortly, and we'll get into the stocks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as always, you can give me a call at 877-927-6648. And we've got mail. I think I have mail. Did I have mail?
I got mail.
Oh,
yeah. Yay! I got mail. Yay!
Yeah, I got mail. Question in here from Dustin. I'm enjoying your show. Thinking my question, I'm a little unsure of the correction. It seems a bit hesitant. Intraday volume isn't big, so I thought it would be. Do you think the market is fixing to bounce, or do you think it will continue to break? Again, probably if you, maybe you didn't or sent this before, maybe not. This looks like you just sent it. I would say that we're going to go through lots of rotations, and talked about that already in IBB already. We're probably going to see other stocks like Goldman find some lows here eventually, probably 1827 now. But you're going to see some, they have better support than others, and that's because they started going down before the rest. So when we look at a lot of these stocks, don't get too excited thinking that the entire market is done going down. We're going to probably still have 2-3 days up and one horrible day down, 2-3 days up, one horrible day down, 2-3 days up, horrible day down, until we find, as Jesse Livermore basically said, complete and utter despair and capitulation. And we're probably going to make a bottom at that point. And then the broad markets started the B2C leg in a leg down. But we haven't come anywhere close to a low, I think, anywhere soon. They hung this market out for just about ever. This is, I'm 1670 seems a long way off. I'm thinking we can do, 5, 10, 15 points down, a couple days up, 5 points down. I think this could last a great deal of time until the bulls quit buying the bounces. Now, they tried to buy it this morning. A pretty good indication that they're not giving up on it. So we will see. But it is interesting. Of course, we've got what the S&P, the futures, ES futures, the minis off about 24 points already. But when we go back and check on the volume, I don't know what he meant about seeing the volume low. I think this is actually better than any day last week at this time, with 2.44 billion shares halfway through the show. So not seeing anything that big. What we did have was a market that was held up for a while. I continue to see the same thing we've seen at previous highs in the marketplace. My trading history goes back pretty much to about October of '98, where I actually sat in front of trading screens almost every day. That I was not supposed to be doing work for my company, but at least those were the days I actually started sitting and watching the markets every day. Of course, it was only about a month later until everything blew up with long-term capital management. So a baptism by fire. Of course, then the huge tech run from then on, of course, because of the Fed putting in such huge liquidity, causing the dot-com bubble. That was pretty much over by 2002, 2003. We finally found a decent bottom in those March lows, running back up again by additional liquidity pumped in by the Fed up to the 2007 highs in the housing market and the May 2008 blow up of the it was May 2007. I'm going to have to write that down so I remember it, of the huge mark of the housing bubble that blew up in our faces. So it is going to be what it is, and that is that we've had a long time up with very light volume. We're going to probably have a fairly decent amount of time back down until we find some level of support. Now, most people probably haven't spent enough time looking at the China market, but it's a disaster, and it doesn't look like it's going to get any better anytime soon. The Chinese have figured that they've created several bubbles, and they're more than willing to squash them very hard right now. That's not going to put a lot of demand in our markets anytime soon. Along with the pullback in the Fed liquidity, that story isn't going to change a lot. And we notice these stocks that are 25, 30% off their highs in just a matter of weeks. These things got a lot farther to go. A lot of these companies probably had valuations at about a fourth of what they were truly worth. And as George Soros famously said, all of financial history is one lie and deceit after another. Your job as a speculator to get on why it's being perpetrated and get off before it's been discovered. Well, it's been discovered, folks. So until we get back down to some nominal median value for stocks and PEs in those stocks, I don't think that this is going to be done. And like I've said, this could be 60, 90, 120 days. The question is just how long it takes to get these stocks back to normal levels when 25%, 30% of all earnings on S&P 500 stocks are directly attributable to below market interest rates that will be going away. And why a lot of people don't believe that, my guess is that we will see significant upticks probably in the first part of next year, and people are already getting out of the way of these super high flyers. So it's going to take a while for this market to pull back, and then it's going to take a while for the market to actually test the lows a few times, and then we're going to have an opportunity to buy stocks at reasonable valuations, probably only to see the Fed step back in and blow it up and make one more giant bubble again. They just can't leave well enough alone. And for that, we'll probably be making money for years to come. Anyway, give me a call, 877-927-6648. Have a question in the den about Facebook. I have no idea. Facebook what? Facebook is back into its gap up levels that had some fairly decent volume. The problem is the volume is as good as it was in that gap up. So you don't have a lot. I wrote some stuff in the Tech Insider and voiced it on this show before about Facebook pretty much being a company built on sand. I don't like the fact that its product is more of a fad that was pitched to the lower end demographics as it went to mobile. This isn't something you can spend 2 or 3 hours a night on, even though they've moved to mobile and they've made some money on it. This year's Facebook is next year's Twitter is this year's Instagram, and it's moved now to Snapchat. And as long as there's new apps, I have a feeling that this is going to be the flavor of the maybe the quarter, maybe the year. But we've seen that. You can't really look at Facebook without looking at Twitter, TWTR. When we get into that, TWTR, I think that's it, isn't it? You got a company really not making any money, doesn't know how they're going to make any money. Facebook was able to do it a couple of times. But as we chronicled on this show, I think it's more in the way that they're making money is more of a scam than anything else. When those market rates come back and many advertisers leaving Facebook, I think you're going to see much more a reasonable valuation in that company. Certainly, Twitter at $74 now down to 42. How low can it go? I think you could see $20 on this thing if it can't hold its longer term levels out here, which when it went public about $39. But I think we're probably going to be testing that in the next few days, and we will find out. Now, remember, especially on Twitter, we got a ton of stock coming to market on this thing. And that's why I'm saying $20 would not be a big problem. And probably the problem with Facebook is going to be at least somewhat guilt by association. I would not be surprised to see Twitter back in the 43s, though. I mean, Facebook back in the 43s. There's also a huge gap between the 26 to 34 level, 33 level. And I could see that one being tested. Facebook probably a decent buy if it comes back to light value in that $33 level gap fill. But we'll have to look at it. And $55, it seems a long ways away. But I have a feeling we're going to see a lot of news like that also. Do we have yet another one? Celgene as a short. CLEG. I'm not a big fan of CELG. Dyslexia cure for found. A short on Celgene. I really don't like shorting biotechs. The news can absolutely kill you. If you had to short and a gun was to your head, you were playing the deer hunter, and the only way that you could get out of it without the Vietnamese shooting in your head themselves, you'd want this thing to do a standard retracement. And if you look, you're going to see a bigger confluence level that was broken. And on Celgene, what you'd want to see is this come up to the 148 to 150 level and find that it had light, if not any volume. You could get into it by there, and I wouldn't be surprised to see it do that. But I would much rather see you go after the IBB and try that on the next leg down after it moves back up. Something similar in the biotech stocks is a confluence area between the last couple of moves out here. That takes you up to 242 on the biotech index, but this thing's probably hugely short, probably going to come out with a lot of things. I'd like to see the IBB get back into this candle on the 21st, where it had the huge move down with 5.5 million shares on the 21st. And, could it be so weak that it wouldn't even get into that? Yes, but I think your risk reward has to be, the IBB somewhere between 248 and 255 for me to take the trade. There's too many better trades out there. And again, these companies, for the most part, do make money and can make huge amounts of money. So I would keep an eye on those. But again, always remember when you're emailing me out here to give me your at least first name and where you're calling from, or actually emailing from, so that we'll know. Hopefully that answered S&P's message in the den, and also our emailer from Parts Unknown. I'm going to look at a few stocks and see how they are doing. And got a little bounce out of the S&P here. Probably going to go test the 1848 probably before the end of the day, I would imagine. We'll see whether or not it can close back up above that level. My guess is we're probably going to roll over at the close, though, being down 20 points on the S&P cash. So looking at some stocks and some of these biotechs, that's why I thought maybe we were getting very close to starting the B to C leg, if not already starting it on some stocks. Come on. I know you're wanting to set something up here. What do we got going on here? We totally... Yeah, we'll restart something, a couple of these things out here. I think I had a few things locking at my computer. Okay. Let's go back to my list. There we go. Okay. So as we're back into Lexion, this is the reason why more than a few of these stocks coming back down here to these levels, but we're starting to see a few of these things that have come off fairly high. This thing had hit a high of 185.43 on February 25th, down to 139.52 on Friday, showing fairly decent, remarkable support. And that's what you're going to see in a lot of these biotechs, why I'm not happy to jump on the bandwagon just yet without a significant retrace. Probably going to bounce, probably going to take some energy, build some energy, and bust through these levels down on the next move. But like on Alexion, ALXN, what we see is a huge bounce on the 30th of January. That bounce came on 5.8 million shares. So what do we get the last couple of days out here? 2.8 million shares on Friday, 1.2 million shares today, and even kind of a little bit of inverted hammer here. Nope, we finally got some audio, but didn't seem what I was looking for. Still have about 30 seconds to go. But anyway, look at some of these biotechs. Look to me like maybe we're probably at the bottom end of their first leg, big leg down. So we'll take a look at that. And we will be coming back in just a few seconds, if we get the audio, which I don't hear anything from.
David White's newsletter, The Technology Insider, is fully identify the best box spreads on Nadex in seconds. Plus, you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Now at 1848, 1849 on the S&P cash, off 16 points on the off 16 points, 2.6 billion shares. This is probably what we're going to see, a lot of volatility, even intraday out here. Going to be some very good trading for day traders. But I have a feeling the big money is not going to be in these individual fluctuations day to day, that we're probably going to see, like I said, days where everybody says it's all over, then gap downs again, start everything all over, and a few days up, and ABCs, and it's going to take a while to find these things. But you're going to have, I think, pretty much a severe demoralization, some kind of capitulation day, and I don't know if that's a 50 or 75 point day down in the S&P cash. Maybe it's just several days down. Maybe it's a huge gap down that will finally end it. But one of the problems I suspect with a lot of people out here is knowing the structure of the markets. I wrote about it in my daily newsletter this morning, and that is an issue with the laws from Dodd-Frank and how it's made everybody hedge. The problem is if everybody's hedged, then there is no hedge. It is a self-fulfilling feedback loop that basically destroys hedges if everybody is hedged, because they basically start losing on both ends instead of on one. And it works fairly good as long as everybody isn't. But Dodd-Frank basically made everybody hedge. Part of the problem with Dodd-Frank also is it made a model that was based on volatility, so that the big street names don't have to come out here and wholesale blow out their shares in a lot of these companies. They're going to try to keep this as orderly as possible on the pullback. And I think, like I said, it could be 90 days, 180 days to actually get a bottom in that would happen after 3.5 years of nothing but up. And basically QE gone this year, and also the specter, at least a fairly decent specter of higher interest rates next year. We're going to have consumer credit here in just about 4 minutes. Going to have some other stuff happening. But I think a lot of people are going to look for any sign of decency out here. It's all going to start tomorrow with earnings. And I got to say, Alcoa is not making me feel all warm and fuzzy out here when we see, especially the markets for a lot of these metal companies, copper, and one of the few things actually up today. But what we wanted to see in Alcoa was a huge move up to break the previous high with 44 million shares on January 29th. We saw 39 million shares, so close but no cigar. And, of course, 24 million on the high at 13.18. But we were right back and on that range, probably looking for low 12s tomorrow, and probably in a trading range between, 12 and a quarter and probably high 10s, something like that. Maybe a move back down to this 1083 after earnings tomorrow. So just be ready for earnings season to start, because it's all back and fired up. And with a lot of these new IPOs, we almost get no rest from earnings season, it seems like, anymore. Anyway, remember to be here tomorrow when we meet at 2 o'clock, same bat channel, same bat time. And remember to sell when you can, or cover, not when you have to. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.